Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, June 7th, the end of a trading week, and certainly a nice one for the bulls. Been a few weeks since they had a good week like this. Finishing the week very strong as the bulls are just continuing to run wild right now within the market. Even saw tech really getting involved here today. So more positivity as we continue to work into June. On the utility side, we started to see some pullbacks. We had a gap up on the open in utilities, and that's like we all remembered that, yeah, these things are knocking on the door of second targets. It's Friday. Maybe we'll take some profits. Hopefully we'll get some nice bull pullback opportunities in that sector sometime mid-late next week. Pretty much everything else in the green, a little bit of weakness in those banks. We've talked a little bit about that, and we'll maybe take a peek at a couple of them before we call it a day here. But hope everybody's doing well. Welcome out. Great to see you guys as always. Hope you had a great day trading and a great day just hanging around, whatever else you were doing as well. On the earnings side of things, it's not a busy week. Only a handful of S&P 500 companies coming out next week. I think Oracle, Broadcom, another one, but just a pretty darn light week on the earnings side. So we still got just in about a month. That's not going to be true anymore, right? Before you know it, we're going to be right back in earnings season, but we got a little bit of time. Pretty light week here going into next week. You saw some of the IPOs like Beyond Meat really go crazy here today. And that was certainly a nice move. I don't do IPOs, but if I did, I wish it would have been Beyond Meat. They've had quite the run. And so good to see you, Jacob. And hello, Micah. Welcome. Looking at the S&P on the 15-minute, I mean, we gapped on the open. We really started running the first hour and a half or so of the market day. And then as we kind of got into, midpoint of the day, and pretty much the rest of the day from that point, really just kind of said, yeah, let's call it good. We didn't see a lot of profit taking, which I think we can interpret as a little bit of faith in the market. Not a lot of late afternoon buyers here today, but certainly held up nicely. Little boring the second part of the day, but we're okay with that, right? And good afternoon, Patricia. And hello, Amy. Good to see you. Hope you guys all had a great week trading. It was a pretty good week for us, I think, in the market, especially for how quickly it kind of turned around. I think it was a pretty decent overall week for us. And hey, Scott, and hey, Elko, great to see you guys as always. Always a pleasure to see you guys. Over on the daily or on the hourly chart, still a little bit of room. We're approaching that old 2890 zone of resistance. We've got about 20 points, give or take. That should be a little bit of a challenge, but recapturing all of the short-term moving averages as this week has progressed. When we translate that over to a daily chart, pushing even through that 50-day moving average here today. So we kind of got that big swing, right? Let's go back in time a little bit. Let's remember, and not say this is going to happen, right? But let's remember when we had that back in the fall where it was a little bit steeper, a little bit faster, right? But drop, pulled back, quick rally, back into that resistance zone. That swing was what pushed us back down. Not to say that will happen again, but that's where we find ourselves here on the S&P going into next week. We got a little room between here and there. A push above that, going to be a very bullish signal. And I believe there's a legitimate chance we're going to get that. When you look at the weekly chart, if this is just a daily chart on your favorite stock, whatever the company that might be, nice pullback, big bullish engulfing candle after forming the same two bottoms the last two trading days. That's going to look pretty appealing to me, at least from a bullish perspective. Let's see how we start that beginning of the week. But if we can take out that resistance, quite honestly, I don't see any particularly great reason from a technical point of view. Still can be from a tweet or a fear point of view, but it seems like, and maybe until we get to our Fed meeting here in a couple of weeks, maybe that will kind of be on, the back burner. Although we say that Monday morning could be crazy, right? But if we can take this resistance zone out, really, there's not much technically, in my mind at least, to keep us from taking another run at that resistance level. This should be a battle. I think this is an important price on the S&P, but it's going to be interesting to see how that one plays out. Over on the Dow, took that resistance out here today. Would have liked to have seen it actually close above the 50. I know that's being a little bit nitpicky there. We're not able to recapture the 50-day moving average, but we're able to push through that swing resistance over on the Dow here already. So a little bit, just another, we saw all week long, finished it up this week, just little things, just another little bit of a signal. Have kind of a big one left to go in these resistance zones, but if we can get through that, maybe June is going to be the month of the bull. Now, it would maybe be ideal for a little bit of consolidation or pullback as I was looking for new trades for next week. It was a lot easier to find, bearish retracement candidates than a lot of great looking bulls. And that's, I'm not going to complain because so many of those bulls, the materials companies, our Lin's and our air products and our waste management and our defense and so many things have ran beyond my expectations this week. So I'm not going to complain too much, but for a whole bunch of great new trading opportunities, there's always some, right? But for a whole bunch, there just weren't as many bullish, great looking bullish plays. We're going to need a little development, consolidation, pullback. Either way, now that we've recaptured these short-term averages, they can certainly prop us up as support catalysts if we do see a little bit of selling. So it might be one of those where things really get interesting for new trading opportunities, at least to the bullish side, maybe more towards midweek next week, for me at least, than on Monday morning. But we will have to see if we can take out this high. We took that out. If we can confirm that with a close above the 50, do want to consider this, but I think we'll probably, if we see that at all, we'll probably be seeing it at about the same time, right? These old highs are going to kind of coincide in there. So we're not quite out of the woods on the Dow either, but just another good solid day. The NASDAQ was right at that challenge yesterday. Well, I mean, how much better can you do, right? That is the way to say, oh, you're afraid of this resistance potentially. Well, let's alleviate some of those fears. And really a ton of good movement here in the NASDAQ. Some of the tech stocks still, and I have my concerns. I don't think the semiconductors look great. I don't think they look terrible, but I still have a little bit of concern overall. But a lot of the fears or my lack of willingness to look into tech was alleviated here after breaking through that resistance zone, also recapturing that 9. Over on the NASDAQ, we actually have room to run. They're running a little bit behind, right, with the price action that we've seen this week. While we do have that flat 50, and yeah, we'll watch it, we should watch it. Price-wise, not really a lot of resistance until we get into that 76. So if this is going to be a runner of a week, if we continue this early next week, maybe some of the tech names can be some of the things we can look into for new trading opportunities. There's certainly room to go there, probably the most room in my opinion, if we're going to stay on the bullish side early here next week. Over on the rut, still doing that dance right below that 1520, 1525 range, right smack dab between the rising 9 and the falling 20. We call this a pinch, right? I know Coach Mark called this a pinch. I'm sure some of you guys do as well. If we can push back through that, well, I don't love it. I will say, hey, you know what? We've created higher lows and we've created higher highs. If we're able to push through that, I think that can push us a little bit more into the neutrality. Don't know that it did enough to completely change my mind on it. As long as we're below that 1525, I think we have to keep a little bit of a bearish skew on the rut. It certainly has been the laggard as of late. And as long as we're below that, I'm going to continue to look at it as such, most likely. Pushing back through that, though, there's room here too, right? We've got all these moving averages and stuff, but there's some room between now and then. And price-wise, we don't really have a lot until 1560, 1566. So we might have to see a little bit of shift in money into some different areas if we want to carry this run early. But there's room in certain areas for this run to continue going into next week. As we move into the sectors, just another good day in the material sector. My only complaint about the material sector is it's just too bullish for new setups. I was desperately hoping to find some diamond in the rough for early next week, but it has just been too strong. I mean, Lynn just flying up the charts. ECL, I know we've peaked at these guys, but they're worth looking at every day. I think, big runs. Sherwin-Williams knocking on the door of an all-time high. A little consolidation breakout might be interesting on you, Sherwin. APD just running. PPG, not great looking chart technically, maybe compared to those other ones, at least to me, but a ton of momentum, recapturing everything, 9, 20, 50, lots of little things above us, so not a great looking chart. Lib, about the only one that's still, in some of the bigger names, looking like a great retracement opportunity. And so it's just not, it's one of those great for existing trades, right? No one's going to complain about that. But for new trade setups, for me at least, and the things I look for, we're going to need a little bit of time, here before something new can develop. Like I said, okay, if I'm going to chase any dragon, it would probably be the material sector right now, but I'm not going to chase any dragon, and I hope nobody else is either. So those opportunities will present themselves in the days ahead of us. But for me, I think we're going to need to see a little bit of consolidation, a little bit of a pullback to get some nice new entries. And that's what happens when things go too well for the bulls, I suppose. Energy, not a lot has changed here for me. Still looking at this from that bearish perspective. There are certainly interesting bearish opportunities out there in this space. A couple I'm watching in APA, working into an old support zone, into those moving averages. Certainly hasn't done anything to confirm a trade yet, but I continue to maintain a bearish stance over there. EOG, still have them in my breakdown list. More another pullback, a Holly Frontier, SLB, another one in the breakout list. So ExxonMobil, another interesting bullish or bearish retracement candidate. You also have, if you are on board, you have Chevron actually knocking on the door of a breakout. I'm not really on board with going long into the energy sector right now, but if I were, a breakout would be what I would be looking for, or the midstreams like the KMIs of the world have held up well, not just this week, but overall. Midstream has certainly been the safest place for the bulls, at least in energy as of late. Still, for me, as we watch where we are on the overall charts, most of them have more of a bearish skew, in my opinion, than a bullish skew. There are a few out there. There's a Kinder Morgan, there's a Chevron here and there, but there's a lot more APAs and EOGs in my mind. Don't think we've had that confirmation yet, but I believe we could get it as early as Monday with downward price action. Probably want to see ourselves take out the low, ideally push back below that flipped around 9 EMA for that confirmation signal. But for me, at least, once again, I'll be looking at this as a bear pullback area, not really looking at it from a bullish side. If you are looking at it from a bullish side, I do think you have a few things you have to keep an eye on. This 63 zone, we've had a little bit of price action here on the ETF. We certainly know we've had a fair amount in that 65 zone as well. We're still very much in the downward trend, and where a lot of the other sectors were able to take out those trend lines, we're still very much there here on energy. And so if I'm looking for some buys next week, it's not going to be on energy, not going to be on something that hasn't been able to at least show some strength. Like, for example, the industrial sector here, working all the way back up into that 50-day moving average here today. We talked a little bit about it. We do have a little history at 76. Of course, the 50-day moving average there too. This will be a little bit of a fight, I would suspect, but not a major level of resistance. Certainly not enough to scare me off if I'm in this ETF. I'm not overly concerned about 76 causing me troubles. I'm watching it. I'm keeping an eye on it, but it doesn't particularly scare me. We're actually seeing the 9 cross above the 20 over here on the industrial ETF as well. Really, it's kind of much of the same on the companies in the industrial sector. So we've had great strength, throughout the last month and a half, right, in in the waste management companies, in the defense companies, and that really continues to be the case. There's still going to be some great bearish setups too, potentially 3M in a little bit of a pullback. You're seeing some of the transports, the railroads, not looking all that great. UNP, is that a potential retracement, a little bit of downward movement? I think you could probably say so. Still great strength overall. Have been slowing down a little bit this last couple of days in defense, but still great trends. You could easily put Honeywell on a breakout watch list. I think, personally at least, the Cats and the John Deere still have to be a little concerned that these are just bearish retracement opportunities or haven't done enough to confirm the bulls. So a little bit bull-sided, still very skewed to a couple of the strong industries from that bullish perspective. Open to both sides, and probably should be, at least as long as we are below that 77. In my mind, if we push back above that 77, maybe we start to develop a little stronger of a bullish skew. But I think while we're still kind of in this range, I think it's probably the right way to do it is to be open to either side of the coin when it comes to the industrial sector. 77 should be an interesting fight if we can push through 76, and I don't expect that to be a huge deal. If the market's not pulling back, I would expect the industrial sector is not going to have a hard time hitting 77. That will be maybe a little more of an interesting fight. Over on tech, how do you not like where we're at? NASDAQ's got a little bit of room. We're pushing right on the door of this 76 resistance zone here on technology, closing above the 50. Weren't able to close that resistance, but we're not going to complain too much about it. What really that has done, we've had, I've had some, very specific names I've been open to, mostly the Visas and the MasterCards of the world, but saw some really nice movement. You saw Microsoft close at a hit and also close at, you close at a new all-time high, but also hit an intraday all-time high. A lot of bounce back in Apple, although that's not a great looking chart in my mind. Visa, in my breakout list, confirmed yesterday, nice movement. Same thing with MasterCard. Still some things kind of in neutrality with the Cisco. Have Oracle. I believe Oracle has their earnings next week, and that looks a lot more like a bearish retracement to me than something to be excited about. Adobe, it's going to have to do a little bit more. Maybe I'll put a little more neutral, but still don't like it. IBM's been showing some pretty good weakness regardless. I think that looks like an interesting bearish retracement candidate. So I don't think we're completely, at least for me, I'm not completely back on board with tech, but I do feel a lot better from a bullish perspective today with the price action that we've seen in the NASDAQ and on the technology ETF, some of the bigger names. I'm still going to be looking into the strength or the weakness. I think there could be good opportunities on both sides here in tech next week. If this resistance pushes us down, some of those bearish retracement types, whether it's an IBM or an Oracle or whoever else it might be kind of appealing. They'll probably drop if the sector's dropping. If we break out, some of these stocks that are kind of knocking on the door, ACN was another one that was pushing a little bit of a breakout here in this space. These are going to be the type of areas that I will be looking towards depending on what happens at this resistance zone. This is a pretty big one, right? This was a major turning point. In the past, this was a major breakout point, and it ended up being a failed breakout point about a month later. So we've got some history here, some positive things going on. The one thing to kind of keep in mind with everything, and we'll just use the technology sector as an example, is during this 4-day run that we've had, 4.5-day run, depending on how you want to call it, we've been very skewed to the upside. There's no question about that, but we've never really generated any sell signals, right? And that's going to be the real test when we start to develop those intraday sell signals and the day traders start making bearish trades. Well, that makes sense. That's what they're going to do. How do the swing traders, the people like you, people like me, I'm not a day trader as a general rule, and if I am, it's usually in the commodities market. How do we respond? Are we jumping in, panicking, selling everything, going short, or are we kind of being willing to sit through it, letting it turn into just a little bit of a pullback? That's going to be the really interesting thing. We will get it. I just don't know when we're going to get it. At resistance would make some sense if we are going to get it. So that's going to be a fight that's worth keeping an eye on. How do the traders respond when we start to see intraday sell signals They're not going to look like super strong sell signals, at least at first, unless it's a huge red candle maybe on those daily time frames. But we always start at intraday and work our way out, right? Over in staples, what do you say about staples other than continues to just be a rock star, very strong week, along with the rest of the market, working all the way up into that 59 range. That, ladies and gentlemen, knocking on the door of a break. Again, much like a lot of places in the market, for new trades, I wasn't finding what I was hoping to find for new bullish trading opportunities. I don't know how you can make much of a bearish claim on staples, whether it's the technicals themselves, the individual components, the relatively defensive yet able to kind of thrive in any type of market conditions. Everything seems pretty darn bullish to me as we're looking at it, at the staples sector. Biggest problem is, again, first world problems for sure. Pepsi is running on us, right? Our Pepsi breakout is still going. Our Coke breakout is still going, although it's kind of a little bit of a gravestone here today. No right to complain about that after taking, working past targets. Walmart has broken out of resistance. Very nice breakout over there. Procter & Gamble kind of knocking on the door, but pretty extended over this week with the price action. Still some relative weakness, as we talked a few times over in tobacco, but most of these companies, again, just because I wouldn't want to buy into something that's kind of ran this much, I feel like I'll catch the next wave. That doesn't mean I'm bearish. That just means I'll wait, right? So whether it's a Costco or a Mondelez or a CL, so many of these companies in still holding trend, breaking resistance, looking great. I don't know how you can not like this sector from a bullish point of view, really regardless of what your overall opinion of the broad market is. As you take a closer look at the sector, hard to say anything negative about it. Over in utilities, we had that pop on the open. So we saw the market gap up on the open, and we saw utilities gap up along with it. Unlike the market that kind of had that first hour and a half, 2 hours of running, it seemed like we all just realized that, yeah, we're either knocking on the door of our second target, or not everyone uses a 2-target system like we do, but we're probably hit or surpassed or very close to targets going into a Friday. We started to sell, and it just kind of continued throughout the course of the day, whereas most of the market kind of took the second half of the trading day off. Utilities kind of just continued to drift to the downside. Not a bad thing. I mean, we hit an all-time high today. How bad can it be? Utilities has been really good for the bulls this last week and a half. There is no question about that. We probably is not a bad thing to get a little bit of a pullback. Nothing goes straight up, as nice as it is when it does it for even a few days in a row, right? Or down if you're bearish. So I think we're going to be looking for a bearish retracement opportunity, which means we're probably going to need at least a couple of more days, at least one more day. Maybe Monday's a doji day. We see some upward movement. I would prefer maybe 1 or 2 more slightly, bearish days into that rising 9. There will be potentially at least some nice pullback opportunities, I think, late next week. But I think that's where we're going to be. I think right now we had a good run on it. Our trend is strong. If you made me do anything, I'd still buy into it and bet on that strength. But since you're not going to make me do it, I think we let it develop for new opportunities, probably into the second half of next week, maybe depending on how it goes, maybe something else will develop, but I think that's what I'm going to want to see. Over in healthcare, breaking through that resistance here today, got to call that a bullish signal. We were able to, we've been kind of in this range. We held support, unlike many other areas in the market. I think you have to really respect what we've seen in healthcare this last little while, where the rest of the market was breaking some support levels. Yeah, it turned around and reclaimed them. Healthcare wasn't. Healthcare was holding support. We've actually broken through resistance here today, closing above the 200, but more importantly, closing above this swing high. Continues to show decent strength after kind of being in a weird spot for a little while. Pretty decent strength in my mind, an area that I continue to like, and certainly an area where maybe there's some opportunities if we see some bullish movement next week. We really don't have a lot of resistance until we get back into this zone. which we could call anywhere from 92.50 to probably 93.50, but we'll just call it around $93 for a resistance zone here on the ETF. The individual components, for the most part, are starting to skew more and more bullish in my mind. Even things that, I'm not interested at all, after that bad news on Johnson & Johnson, really has just kind of taken off and reclaimed everything. And I don't really want to mess around with that. That news can get you either way, but it really bounced back. Our UNH is off of a swing, swing low here, still showing characteristics of an upward trend. Breakout candidate for Pfizer as early as Monday morning. We're knocking on the door of resistance. Not there yet, may not get there at all, but that's a pretty clean potential breakout in my mind, at least. You have Merck, who's still got a little bit of room before we get to resistance, but been trending with us for a little while now, been doing some nice things. AbbVie still, I'm not sold on them, haven't broke down yet, but haven't shown any real signals the other way. So while there are some strong stocks out there, there are also some weak ones, right? CVS kind of comes to mind, but I found quite a few actually that were interesting from a bearish point of view. Still have Lilly in. Absolutely, Ilka. Still have Lilly, still waiting for a break either way. We're knocking on the door again. Could be as early as Monday, could not be, right? But when we're this close, could be. I still have Chevron on the other, or Chevron CVS on the other side for a potential breakdown. So still opportunities on both sides of the coin. If we pop in here really quick, let's go take a quick peek at a couple of these healthcare bears that was finding. There are some bearish retracements. Alexion, bearish retracement. This BioMarin's not an S&P company, but hanging at some pretty serious longer term support level, kind of going against the grain. CNC kind of a little bit of a backfill on a gap down. So there's still some bearish things out there, but we've got Holix breaking out of resistance. Another little breakout, not a lot of resistance for a little ways to go. Lilly, we already took a peek at. Tandem's a little bit weird, but they're kind of lining up for a breakout, maybe just not in the shorter term. But if you look at their weekly chart here, this big old scoop, right, knocking on the door of this resistance zone. We got a little ways to go before we're there, but I didn't want to forget about them, even though I don't think there's much here next week. WCG, another breakout candidate, Ilka, here, tested resistance, drop, tested resistance, drop, testing resistance, to be determined, right? We will see. So, and X-ray, I know we've looked at X-ray here before, after consolidating, after a big gap up on a really good earnings report, finally trying to push through some resistance here as well. So some pretty good opportunities, no matter what the market throws at us next week. I think in healthcare, one of the areas that I think illustrates that the best. I think, I could see great bull plays or bear plays or a combination here next week without a whole lot having to develop new, not a whole lot of consolidation or pullback or anything like that. So yeah, they're in mine too. Lilly's probably my favorite one, but I liked that WCG as well for a breakout list. So I'm with you there, Ilka. Over in discretionary, we've talked a lot about it, but it is worth mentioning one more time, at least quickly. Very much a stock picker sector. Retail still looking pretty weak, very bearish retracement vibe to me, at least, within the retail sector. For the most part, there's always outliers. Target, the dollar stores, Dollar General, after breaking out on its resistance, that has just been a beautiful situation and not really a hard one to take advantage of this nice bullish week in the market, because we broke out late last week on a really good solid earnings report. So there are companies out there in the retail space, but there's a lot more that are looking like Urbans and Kohl's and Macy's and the Gaps and all of those not so pretty type of charts. So as we're kind of working through discretionary into next week, I think we want to keep that in mind. You've got an Amazon kind of knocking on the door of a challenge zone in my mind. That old support zone should be an interesting battle there. They certainly impact the ETF. Home Depot just continues to build on the strength. Still don't think that's a great looking chart, but I do respect what we're seeing. Of course, McDonald's, I'm not sure if you're here, Emily, but Emily's, I believe she had something going on with McDonald's, and I'm not sure if she moved into it yesterday or if she moved out of it today, but I mean, how you not like what you're seeing on that side of things. Nike, though, it's more retracement-y, kind of ugly, but kind of a retracement type of a thing. Of course, Starbucks, we've talked a lot about, had a great week off of the 50. So again, it's one of those areas where a TJX candle's not great, but could easily go into a bearish watch list with where our trend is here today. But I mean, who's putting Starbucks in a bearish watch list? I'm not buying Starbucks next week. If I'm not here, I'm just cheering for other people and waiting for something new. But in no world would I want to go bearish on that type of a chart. So within the discretionary, I think we're pretty picky on either side of things. I think we have to respect that the ETF can go a lot of ways because of Amazon, where it finds itself on our chart. The overall weakness, I guess I was going to say overall strength, but overall weakness is a better way to put it in the retail space. But again, great looking charts out there still. So again, I think we'll just continue to look at this from that point of view. We do have to contend if we're working with the ETF. We've got a little bit of a swing here in that 117 range. We have the old resistance level at that 118 range. The flat 50, which I wouldn't expect to be a huge deal as we're moving forward. So we've got a little bit of room on the ETF before we start working into some resistance zones. I think we can look to 114 as that first level of support if we see some downward movement here the first part of next week. Over in the REITs, kind of like utilities, just to a much lesser extent, saw a little bit of a profit-taking day here today. Continues to be very, very strong, though, and probably going to need a little bit of a pullback for a whole bunch of great-looking new setups, but things are still looking pretty darn good over there. American Tower continues to run. There are going to be some bearish ones out though. SPG just hanging by a thread at its falling 9 EMA. You have CCI running after its recent break. My favorite, Prologis, knocking on the door of resistance after a pretty good week here today. Public services just had a monster run as of late. EQIX, potential breakout. So if I'm looking for things early, maybe that's somebody who could go into my list if I'm looking for a REIT early next week. So for the most part, as you kind of work through some of the big names within the retail or within the real estate space, I mean, it's pretty clear to me at least that we're skewed to the bullish side. There's always somebody bearish though. That's a pretty ugly looking chart and a pretty ugly looking gravestone candle. If there's a deeper pullback in the REITs, this might be something worth being on my bear list, even though it is a REIT, not necessarily the most exciting thing to swing trade. Generally speaking, that's certainly not always true. So when we look at back to the ETF, again, hard to say anything other than, well, I would like it to pull back. I would like it to consolidate, making new highs. Everything is still strong overall, is in my opinion at least. Swing low, kind of be that first level of support. We can also kind of look to this old resistance zone around 37 and that 9 EMA to kind of act as potentially a support catalyst. And then over in XLC, a little bit of a bounce back day, still not out of the woods yet, still an area that I am leery of. I don't trust Facebook. I think this is potentially a good bearish retracement, just not today, not with today's strength. But if we see something develop on Monday, a little small inside body candle, for example, that could definitely change my opinion. We've got some room to go before we test resistance. And if we run into that resistance and then see some sell signals, that could be interesting too. Maybe we are just going to bounce off of the 200. That's certainly a possibility. I'm not interested. There's too many things out there that look good that I feel that I can trust, at least relative to what Facebook looks like. I'm not going to try to be picking up that dollar by any means. Google, nice day here today. But again, do you trust this chart? Because I certainly do not. I think there's lots more ways that this goes wrong than goes right from a bullish perspective. You do have an EA, speaking of K-Trade, Ilka, and I hate to even talk about EA because I hate to trade EA because I'm very biased when it comes to EA, as many of you guys know. The gamer in me is always grumpy about what they do to my games. But if we're just thinking about the pattern and not the name, starting to develop a pretty clear top. We've already developed a pretty clear bottom. These were in my bear list. I don't know if I would have done anything with it had they broken support, but they were on my list going into the week, starting to develop into this range. I don't think they're as pretty as maybe the Lily chart looks for a K trade, but starting to develop into it. You also have, some weird stuff going on with the AT&Ts and the Verizons, although AT&T a little more well behaved than Verizon. You could argue they've just been really weird, especially for them, in my experience at least. But they're knocking on the door of a break. I guess you could get excited about that. They've been looking weird, and Verizon's had a weird impact on them too. Verizon looks really weird, right? A lot of gaps, a lot of back and forth, knocking on the door of a breakout one day and breaking down 2 days later, type of stuff. Kind of a mess. But you also have charters breaking out, hitting highs. You got Comcast, that's just waiting. I can steal you because I don't have to worry about a breakout. Whoops, I don't have to worry about a breakout happening in the immediate future. At least you don't think. These guys could easily be on the breakdown list with where they are. Disney carrying through a little bit off of that little break that we saw yesterday here today. So a little bit of follow through. So again, we're kind of in the middle within this space. As you guys know, this ETF is, in my mind, is something to be very careful of, simply because of the influence that Facebook and Google have on the way that chart looks. That's never probably going to change until we get weighted a little bit differently, because that just concerns me. But if we're looking at the ETF, maybe it doesn't concern you. We're kind of right at that challenge point, right? Testing that old floor should be our first level, but as of right now, still have made lower highs and lower lows, have not broken through resistance, haven't reclaimed anything other than the 9, and I guess the 200. I guess we'll give it credit there. We haven't recaptured nearly as much as we have in our other sectors. So that is where we find ourselves going into next week. Should be a weird start. It doesn't seem like you never know, but it seems like next week, the first part of the week is going to be more prep for me than new things. And that's not a bad thing. That usually means this week was good, but I always want to have great things to have on Monday morning. We'll have a few. We found a few for you in our scouting report. So we'll have a few to share for sure. Over on the VIX, a little bit of a bounce back day, if you want to call it that, but really not a lot to see here. Basically, you either feel like you still need to be cautious because of the trade war stuff and the sensitivity of the market, or I guess you don't. I think we still need to be taking that cautious approach. I think we trade what we see. I always think that. Just think we have to accept that, we are still, a bad report or a tweet away from the futures market gapping down, right? We're not that far removed from that world. Seems to be simmering down a little bit, but I personally don't feel like that means anything, at least looking at the VIX. I'm still preparing and acting as if, so to speak, that any given day can be pretty darn volatile. Over in the dollar, more weakness here today, and not a great look. And I don't know what happened to my 200-day moving average there. It looks like it's slowly loading up there, but closing right above that, holding right above that 200-period moving average here today. And I don't know what's going on here. It's been stormy out in Utah. It's been a weird start to the, or end of the spring, start to the summer, whatever you want to call it. But maybe we'll come back to the dollar, see if something else will bring up those. Yeah, that's weird. I don't know. Who knows? Technology. You guys know me in technology. We'll come back to the dollar. Rough day in the dollar. We're getting close to that 200, though. That's going to be an interesting fight. But let's look at gold first. A little more interesting. Still pushing into. We actually broke 1350 on the intraday on gold. We're not able to hold it. Again, a ton of strength. No one needs me to tell them that. It really just kind of comes down to we're pretty range up, right? Again, no one needs me to tell them that either. So it's just how do we want to play it? What are we looking for? Consolidation for a few more days into a break above 1350 perhaps. Maybe this 9 works up and kind of forces the issue. We either get a deeper pullback or we break resistance. But right now we are right at what I would consider resistance at 1350. We have some room next resistance zone in that 1370 range in my mind. So if we can take out this resistance, I do expect it to have a little more upward movement. But I'm going to need to see something. I don't necessarily know what. A consolidation would probably be ideal. 3 or 4 days of the same ceiling on that hourly chart and then push through it. Probably the best signal in my mind within gold, but still very bullish. Hard to say anything other than that about the bullish side of things. I'm just going to give up on the dollar with the 200-day moving averages right about here. So we're just not going to get to see it. We've seen bounces off of the 200 on the last 2 times we've worked back down into it. And that's really weird. I wish I had any logic to why that is, but you guys know me, and it's just a wonder I can turn my computer on most of the time. So if that holds and we start to see some movement, I could understand traders. It's treated them well. It's always scary when you get down there, right? Because who the heck wants to buy this? I certainly don't, not the way it looks. If we see some movement early next week to the upside, maybe we can look at this as a little bit of a pullback opportunity. If that 200 gives out, realistically should probably, in my mind at least, at the very least, figure we're going to come back to this support level here at around 95.80. So this is in a pretty interesting spot. It's going to need a day one way or another for me on Monday. And who knows, a 200-day. I'm glad if it's on something, the dollar index is, of course, the one I would choose. So over on silver, closing above 15 here today. Do you think you have to give that a little bit of a bullish nod? I'd still much prefer gold. And if I'm trading metals, realistically, it probably is not silver. It probably is gold, at least bullish during the current conditions. Looking at it from a resistance point of view, the one thing we can say is we don't have a lot, and it's probably easier to put into practice on an intraday level if we're trading the futures market, but we don't really have a lot of resistance until we get into that 15.25 range. There's really not a lot. Now we have today's intraday high that we could look at, but even that's a little ways away. So there's not a lot of resistance that, anything could develop, but we have some room between here and that next level of resistance if we can hold that $15. We tried last 2 days, failed both days, getting the win here today, showing some decent strength. But again, as I look at it overall and I compare it to gold, because usually that's how I'm going to go about it, I respect what I'm seeing in the price action on the candle this week, because I think you have no choice but to do that. But you look at silver and you look at gold, and to my eyes at least, you guys know me probably well enough to know that I like trading into strength. I'm not trying to get the best deal. I'm a breakout trader, right? So no surprise. I'm going to be liking gold over silver right now. But we really have a little bit of room with our next level of resistance. We have taken out those daily moving averages now. 15.25 about the resistance zone I would be looking at for that next level. 15 as support. Again, we'll let this rising 9 try to catch up. Maybe that can give us something mid next week. Over natural gas, just kind of hanging, but at the end of the day, this is a breakdown. We all know that that's at least how I'm looking at it, a confirmed breakdown on that weekly chart. More downward movement next week, I would expect to create more selling pressure. This was a big break, right? We've talked a lot about it, no reason to overdo it, but this was a big breakdown. As long as we're below that line in the sand there at around, and I'll call it 250, but it's probably best to give it around 250. It's bear or nothing, and even going above that, it wouldn't be bull. It just maybe wouldn't be as bearish. Very bearish personally. That's a huge break in my mind. I think many of you guys probably agree with that as well. And lastly, over in crude, getting a little bit of follow through off of yesterday's upward price action. For me, again, this is just a great thing. I want to see it work up, maybe 1 or 2 more trading days, start to give me some sell signals, doji candles, turnarounds on the intraday chart. I'll keep an eye on this hourly 200. A lot of times that can and does act as a catalyst for potentially support or resistance, but we've got a little bit of room to go before we're even testing that. A lot of areas, we've talked about it, that 50 is, really it could be anywhere from the 9, just shy of $55, really anywhere up to as much probably as $58. Any pullback in there with some sell signals, I will definitely be very interested in the bearish retracement if and when we get that. On the other side of things, if you are prone to being bullish on it right now, Well, I think we can say 50 is your support. Not only is it a big round number, we know that crude likes those big round numbers, but it's about where our last bounce was. So 50 probably that support level. If that gives out, we don't really have any support until the low 40s, 42, 43, 44 range. So definitely think this could end up being a nice bearish retracement candidate for us, at least potentially sometime mid next week. But again, we're going to need a doji, right? Anybody who saw a report, every now and then you'll see that. You know what that means. Like the setup, need a doji. And so certainly going to need at least one more candlestick before we get done there. Doing a quick rapid fire before I let you get out of here. Sure, MDT, a good looking one. Ilka breaking out early in the week, now knocking on the door of that 98 resistance zone. I'm probably thinking on an MDT, what I want to see is either a pullback or a consolidation into the break. I think personally, and just for my style at least, this is a tough line in the sand. I thought about putting them in my list, for the scouting reports actually, Ilka, but as I was kind of thinking about it, I really think that for this chart, it probably needs to chill for a week before the breakout, before I would be all that interested in it. Love where it is. Think we have to get above these highs. I do think we've got a little bit more room to go. And generally we like to, if we're that far away, you're gonna need that much movement. We'll kind of take a closer look at them next week. Really like it potentially as a breakout if we can take out those highs, just not, it needs to do that first, and ideally consolidation or pullback run into it would be what I'd like to see from a purely technical perspective. Over on WSM, is that Williams Sonoma? I think I looked at them too here today. So I looked at a lot of things here today. Yeah, I actually had them on a break not too terribly long ago. These guys are interesting. Big gap up. I'm not sure if what exactly that news was, Ilka. Maybe you are, but that big gap, if that was actually good news, not just the way it went. If we were to start to see some sort of turnaround, could be interested on the other side of things. If that gap gives out, then maybe some potential selling opportunities. At this point in time, if I have to do something with these guys, this is what I love about breakout trading. I have all the time in the world to think about it. Catch some support, take another run at that 60 resistance, break out, because there's upside from there. So again, really like this from that perspective, even though that may very well not be the way it goes. Certainly not a great week. The whole market's been doing well. Not so much Williams Sonoma here. So I don't love that it's shown a lot of weakness the last 3 days when the market's shown a lot of strength, but somebody's got to go down, right? Maybe it was just poor old Williams Sonoma's time. So if I see some upward movement, probably would be interested in, be okay with letting other traders take that risk. A break, though, again, maybe this is a 2-weeker from now, but a break absolutely could be a very interesting. You're going to have another breakout on Canada on FMC, like your style. Again, the only real issue on the FMC break is very extended to the upside, and that is a little bit of a concern. That's kind of coming back full circle. We almost need a few days where we pull back, we consolidate, so we can kind of reset a little bit. We do have an all-time high here. I believe that's the all-time high, if I'm not mistaken, at $84. So that's something that we'd have to keep in mind as well. Hershey, listen, you never have to talk me into Hershey. Hershey has been fantastic. I can't tell you how many times I have typed the ticker symbol HSY on S&P stocks that made a new 52-week high today, that I do over in the Tackle Trading Twitter at the end of every day. I mean, what do you say about this, right? It's been literally almost every day, not every day, but it's been darn close for months now. Hershey's strong look. Maybe we do need a pullback. Maybe we need to come to that 9, something along those lines before again. But again, you could have said that 2 days ago. Heck, we could have said that a month ago, right? Hershey's has just been absolutely fantastic. A couple more and I'll let you guys get out of here. FNF. Ooh, another interesting break, little W type of a pattern. So you could argue they've already broken out here. I must have been looking at, I was putting these together for just kind of trying to think out loud on them. You think you could argue this is a really interesting one. Now let's come back to this weekly chart here, Ilka. kind of see where we're at. We've got some highs kind of sitting right on top of us that we'll have to respect and contend because we've tested this range on multiple occasions. So while again, that might make it a little trickier, the very, very short term, that also might make it prettier when we finally break through that. So should be an interesting one to keep an eye on. And of course, lastly, Allstate, hard not to like these guys pushing right into this resistance zone. Again, the only problem that we're running into on some of these stocks, Ilka, is this stuff, knocking on the door of a break. Sure, we're extended to the upside, but that's not necessarily doesn't necessarily mean anything. That just means that we had a heck of a run to get from support to resistance, but we've got these little extra overheads kind of sitting on top of us that could potentially mess around a little bit with our risk to reward. So I really like your list here, but I think, for me at least, I think I'm probably going to like your list more next week at this time than Monday at this time, if that makes any sense. Really like your breakout list, though. There is no doubt about that. Before I let you get out of here, a few other interesting names. Let's see here. DHR broke out yesterday. Nice follow through. FLR on the other side, potential breakdown candidate. We looked at 3M. We looked at the railroads looking kind of grim. KSU, I like KSU. They had that nice breakout. Right now, that's failed. That is pretty scary. UTX, another potential one, although they do have the 200 propping them up. C-Trip was an interesting bear breakdown candidate, I thought, in a week where everybody was buying. Our feather in the cap on C-Trip here is we held support. I don't know if this will make it into the reports, but it'll make it into my reports next week. Weakness still in a lot of the transport, pullback, bear retracement on the on FedEx of the world. Yeah, PayX breaking a little bit here. Today, breaking a little bit to the upside, taking out an all-time high. Some of the tech stocks, though, ACN knocking on the door of the break, AKAM, actually kind of like the Disney style, where we had that big run up and kind of dealt with that same level of resistance. I thought these guys were interesting from a bullish point of view. Little upward movement Monday could maybe even confirm that per my rules. For my rules, at least, a lot of room. Had a nice big move not too long ago. Microsoft breaking resistance here today. Some of the chip makers not looking great. Nvidia made it into my list, but you also have things like Broadcom, and I think these guys have earnings, but I don't like the way that looks. I mean, it is what it is, but that doesn't look like a strong chart. X-Links, another one. And you can pretty much, unless it's AMD, you can pretty much look at most of the semis and they look like this. On a positive note, they were able to kind of hold these 200 period moving averages. On a negative note, they've not really shown strong signals of reversal, at least in my mind, going into next week. An interesting little pullback type of pattern on Switch, I thought. That was kind of an interesting little pullback. This was supposed to be CMA and not CME. Although CME deserves a little bit of a nod as well, but bearish retracement, CME, those exchanges, ICE, NASDAQ, CME, pick your exchange. I know we were working with ICE over at Tackle Trading, but I mean, good run, good run. FTDR, another little pullback type of a pattern. So there are things out there, both bullish and bearish. As always, not as many as I was hoping for personally going into this. I'm just going to steal that. Kind of do this really quick because I'm going to need that anyway. So not as many great bullish setups. A lot of them are continuation type of patterns. And, at least for the way I trade, I like right when it breaks support, right when it breaks resistance, or that next day. Of course, you guys know me. So, but there will always be opportunities on both sides of the coin. So, should be an interesting week. We'll certainly get you some good setup set up for next week in the report. So, I'm going to let you guys get out of here so I can get over to that meeting with the rest of the coaches. But as always, guys, thank you so much for your time. Thanks for joining me. It's always great to go through this process with you. I hope you find it helpful. I know I certainly find it helpful. So selfishly, it's good news for me. So you guys have a great weekend. Of course, if you are new around here, be sure to subscribe to the channel, hit the notification button. Join us over on Twitter. You can find me at Frank Martin 23. Of course, Tackle Trading, just at Tackle Trading. If you haven't had a chance to head over to the Tackle Instagram, Coach Gino's got a little something over there for you. I would definitely encourage you to go check out. Should be a lot of fun for you and maybe give you a couple of ideas. When you get a second this weekend, might be a good way to go. We'll get you those reports up and running here tomorrow afternoon or early evening, depending on where you live, as well as the newsletter. So I guess that is going to do us. If you're not a member of Team Tackle, you know the drill. You're always invited to head on over to Tackle Trading. We'll be happy to get you set up with a free trial. You can see what it's all about, see what you think about it. But you are all very, very welcome, guys. As always, it is my pleasure and privilege to hang out with you, talking stock, talking markets. A fun week in the market. We'll kind of go rest up a little bit for a couple of days. We'll start the whole process in another potentially really interesting week here all over again on Monday. So thank you so much, guys. You guys have a fantastic weekend. Be ready for Monday, but spend some time doing the things that you love with the people you love. Of course, always an important thing as well. So thanks a lot, guys. Get out of here. Have a great weekend. I will see you same time and place Monday afternoon. Bye, everybody.